Hey everyone, Mortgage Nerd here. I want to tell you a personal story. So, we all learn from our mistakes, don't we? Isn't that what life is about? We fall, and we learn how to get back up. Any successful person that says that they've never failed, they're lying to you. I've never heard a successful person say that they've never failed. So, I'm going to go back to my early years in real estate, or actually even before that. When I was 18, getting out of high school, I remember telling some of my friends back then, saying, hey, I'm going to buy a house. They kind of laughed at me. They're like, you're crazy. First of all, I came from a pretty poor background. I had this old beat up car. So that's all I had to my name. I could barely make it through college. I had to join the Army to put myself through university. So it was kind of far-fetched. But to me, I knew I was going to do it, and I did it. I did it at 22. I bought my first property. I had just come home from Afghanistan, and I was able to get 100% financing, even though it wasn't VA, because back then there was a lot of that. So I bought the property at $93,000. It was a condo, Royal Green, if you know Miami. And so I left to Iraq. I bought it between my two deployments, Afghanistan and Iraq. I left to Iraq. Property was rented. It was awesome. And when I got back, it was 2004. So I bought it in 2003. I was at 22, came back in 2004. 2005, think about it, real estate was booming. And so I'm being told, oh man, you can access your equity. And my equity had doubled in 2 years. My value had doubled in 2 years. My value was about 180 on that $93,000 purchase I made. I was like, heck yeah. I took out a line of credit and I started buying real estate. My mother passed away in 2006, and I got a small life insurance policy from her of $75,000. And I turned around and I kept investing. And I started in the mortgage business towards the end of 2005, and I was being guided in this way that's saying, hey, it doesn't matter. It doesn't matter if your rent is lower than your mortgage payment. In other words, you're upside down, you're negative. You're paying out of pocket every month to have this property. It's not how it should be. That's my end point in all of this. But I was being guided in this direction, being told that, oh, it's okay. Values are going to keep going up. It's never going to go down. Keep investing. And I remember at the time my wife, Lacey, telling me, stop doing this. Towards the end, she got really mad at me because I ended up with 7 properties. And we all know what happened. Market crashed. A lot of people went into foreclosure. So 2008 was the worst year in mortgages. My livelihood was mortgages, and I had these properties upside down, and I was negative paying out. So ended up having to go into bankruptcy in 2008. I'm never afraid to say that. I've learned a lot. I never missed a payment on anything since filing bankruptcy. FYI, my credit is 787 and 800 right now. But it was a great lesson learned. Now I own a single family home in Westchester area valued $457 because I recently had an appraisal done, and I own a $2 million commercial property, an office building. So it's kind of like the game of Monopoly. I had all these houses, I lost them all. But when I came back, I said, instead of a lot of little houses and I've learned lessons. We'll get to that lesson again in a minute. But one lesson I did learn also is hotels, like in Monopoly. You want the big houses there. So I got the commercial property. That's not for everyone. Sometimes smaller properties is what you want. I had someone come to me the other day and say, Phil, I don't know anything about real estate, but I saved a lot of money because I want to invest in real estate. And I was watching your videos, and it's an old friend. So what do? I said, if I were in your position, you got about $60,000 you want to invest. What you want to look at is a 1-story townhouse. 1 story because you can get an older person that doesn't want to climb stairs in there. They have a fixed income. They're usually responsible because they're afraid of not making that payment. So you can always rent it. Market crashes, things go bad. You'll always have renters in there. 1-story townhouse. Condos usually have higher associations than a townhouse, 200 to 250 range. That's, to me, my ideal investment property at that level. So what I learned in the end is anytime, even investing in that type of property, you want to cash flow. You have to cash flow. If your expenses are higher than your rent, it's a bad deal. Walk away. You want to have profit, a certain amount of profit, because there are going to be months where it might be vacant. So those are all the things you want to look at. These are all the things that I teach because I understand the business. I was guided the wrong way in my 20s, and selfishly so, because they were making commissions off of me even though I worked with them. And even though I make commissions off of my clients, I'm successful enough where I don't need one loan to make me or break me. I give advice on what I would do for myself or my family, because I know that that person's going to come back around even if we don't do anything now. So take my lessons. I hope it helps someone out there. And if you judge me for my mistakes, well, shame on you, because I'm sure you have mistakes. What does Jesus say? Who has no sin, cast the first stone. I'm here to help with anything. Phil Stevenson, Mortgage Nerd. Thank you.